interview. But in the meantime, J.J. Kinahan is chief market strategist at TD Ameritrade. So I love Robinhood. I love the democratization. I think it's great. You can't say anything about the apes or the Reddit traders. They call you like a bloated boomer or something. They come up with some horrible alliteration for you. But in that report that saw these huge revenue gains, they mentioned Dogecoin and meme stocks. Is that a sustainable business model in terms of revenue growth when those are the two things that you're really hanging your hat on?
Well, the one thing I will say is Robinhood has gotten people excited about the markets. That's good for everybody. They talked about the fact that this quarter may be a little bit slower. Well, traditionally in the brokerage business, this is a little bit slower quarter. So I think, what one of the things that would be good for them and probably good for the industry is some other stories that help get people interested in the market again. You and Andrew just talking at the top of the show here about so much of the swirl that's going on currently that helps volatility. Well, Robinhood has a lot of folks who trade options, and so options traders love volatility. So if we start to see any type of sell-off, et cetera, you may get people interested in the market in a different way and in terms of where they were before. The meme stock story has been a strange one all year long. I think we're all trying to figure that one out, Joe, in terms of what is the sort of, spark that lights those that suddenly has people interested in trading those in a different way. So that's just very, very difficult to predict. So with that, I think like every brokerage firm, you did see their margin book grow a bit, et cetera. So those are the types of things I think you have to look for further growth.
Just if I were to just thinking through this and from the devil's advocate point of view, okay, so I don't know whether this is fluff. I don't know whether NFTs are fluff. I don't know whether the market itself is overvalued because of the Fed. I don't know whether crypto is overvalued. I don't know whether meme stocks are. I don't know any of that. But the Fed might taper someday. You also might not get another stimulus check that apparently some of that money was going into to some of these accounts. So take all that away. And what if we got into, I don't know, a market that wasn't quite as exciting, that was longer than, a week or two? Like, I'm not thinking about 1974 or anything like that, or even 87. But what if we got into a market that just doesn't go up every day? What are the prospects and some of these, some of the areas of fluff, some of that comes out. What's the prospect? You think that they could attract people to buy puts, is what you're saying, or to play the downside of a market move at Robinhood?
Well, volatility affects options across the board. Calls and puts go up together, go down together. So with that, volatility gives people an opportunity in downward markets to do some things that, some strategies that you don't necessarily get to do when the markets are boring overall. And let's face it, Joe, first of all, I think if you knew what was overvalued right now, you wouldn't be sitting here at 6 a.m. every day, right? You'd be on a yacht somewhere. But the other thing about it is, with this Fed taper coming up,
I could be on a yacht
I know
already.
that.
I'm in a very, like a dinghy, maybe, but I could be on a... no, I don't.
But
go ahead.
But what I was going to say is, we are in an environment though where, let's face it, you guys lead off almost every single day, or somewhere in that first couple of statements of your day is going to be about the Fed, and there's no reason, in my opinion, to believe that that's going away at least for the rest of this year. Yes, you may get some more indications, et cetera, next week at Jackson Hole, but that is going to continue to add volatility to the market. And the one thing that I find really funny right now is everybody wants to talk about the bear case. We're just off all-time highs. So natural market forces should have some sell-offs in there. We just haven't seen any sell-off really of, huge proportions or even small percentage proportions, more than 1-2% in quite a while. So I think there's also this expected upward movement in a little bit, to your point. If you look at what the S&P 500 cash A 1 standard deviation move, so an expected move for a day like today, is $38. Yes, we're down a little bit more than that, and as you mentioned at the top, we were down more. So I think people have to put some of this in a little bit of perspective of the fact that if SPX ends up down $38 today, that should be the expected move.